Hey, it's Clay, and this will be a video chart on ticker symbol FNMA. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to do this time frame. I think does a good job of telling the quote-unquote story of the price, and then just makes mapping out levels of support and resistance a bit easier to see. This one got hit pretty hard today. It actually started yesterday and somewhat continued into today, but that's what provides the interesting setup going into next week. And as like I said, a quick walk down memory lane. This will help, with the setup. But yeah, like I said, the price got, hit very, very hard. That carried into today. But then all of a sudden today, the price started to go sideways. And by going sideways, and this brings about our first technical level, it created this level of support right here at, let's see, what is that, $1.23. So $1.23 is essentially where this bottomed out. Yeah, I get it. The price did drop slightly below it there. But for the most part, the majority of the day, the price held above $1.23 and started to go sideways. Now, don't get me wrong, though, and I really wish trading was this easy. Just because the stock got beat down really fast and then all of a sudden starts to go sideways does not guarantee that there's going to be a for sure bounce. Now, would it be shocking if this bounce continued? No, that wouldn't be shocking, but myself nor anyone else can sit here and say that a bounce is for sure going to happen, because for sure implies that there's guarantees, and there's just no such thing as a guarantee in the market. So again, at this point, it at least becomes logical that there could be a bounce. Case in point, let's just kind of find a random spot. But right here, when this was all occurring, at no point in time to say, I wonder if it's going to bounce. Why would you think it would bounce when it was all going straight down, right? But at least now with the price going sideways, it becomes logical that a bounce is possible. So in the event a bounce does start to occur, the key level of resistance to keep an eye on is going to be up there at that purple line there, the 50-period simple moving average. I mean, just going back through the history of the chart, you can see this thing has quite a bit of history now with just knocking down the price whenever the price has gotten up around it. So I'm not saying it's impossible to break through that level or anything like that. I'm just saying that according to the past history of the chart, it's looking like the bulls really are going to need to bring their A game to not only fight through that level, but then also be able to get some closes up above it. And then again, as far as supports are concerned, it's all about $1.23. Any sorts of breaks below $1.23 or worse, if the price separates to the downside, that just implies that not only are the bears still in control, but they're gaining that much more momentum. But as it stands right now, the bulls are showing some signs of strength via the sideways price action. So we'll see if this is the start of some sort of bounce or not. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.